What are the questions you need to ask yourself before you sell your stocks or equity funds? So that's the topic for today. We all know the market has touched its record high. It's been the highest ever since. It's the first time in history that it's touching such highs. And what should we be doing? I know a lot of people become anxious when the market hits such high because they want to sell and make those profits, because right now till the time you sell, they're all virtual profits, right? They're all profits, but they're not being realized, so they're unrealized profits. And a lot of people have been wondering if they should sell their stocks and equity funds, or at what point should they sell. Just because the market is at its peak, it is at its record high, should we be selling? So today that's one thing that we will cover in our conversation about the ED Wealth Decoding. So I'm coming straight on to the first question. And I love, before the first question, what ED Wealth is creating for all of us. It is saying our intention is not to change your decision or prod you to stay put. We only want to ensure that your exit decision is for reasons beyond merely second guessing the market direction. Because if you are selling at this point, probably you are telling yourself that this is the record high and market is not going any up. And when it goes further up, it might be that you're going to regret that decision of selling. It has happened to me in the earlier years of my investments. I chose great companies. One of them super companies that I bought one share for 30,000 and I sold it. I sold it at a 50-60% profit. And later it zoomed up and the stock price went 3 times of where I had bought it. It was a mistake I made in the earlier days. And I learned my lesson then. So let's see, what are the questions you need to ask before you actually sell? Is market direction the only thing you need to be watching for? Is it the only thing you need to be seeing? If the market is at its record high, should you be selling? Because you're expecting the market is not going to go up. So all those conversations, and let's move forward on that. So first is the market noise playing on your mind? So there is a lot of noise constantly in this market. Rather, you will notice 99.9% conversations which are happening in this market or in the papers or on the channels or in WhatsApp groups are mostly clutter, mostly noise. Example, I will talk about noise that I'm really noticing, and maybe I am old-fashioned, but I'm just sharing this. In every bull run, there will be many IPOs which will come about, and this bull run is no different. We all know that we've been in the bull run for quite some time now, and this bull run started somewhere in 2020 after the market crash. IPOs are coming left, right and center. People are discussing IPOs. They are wondering, should they buy, not buy. Many experts are coming up with their study of the IPOs. And it makes me wonder, especially for my community, since I know most of you, we are all at the foundation laying stage. Now, at that foundation laying stage, should we be looking at all this noise? Hey Poco, you're trying to completely spam my space, and I am not in alignment with this usage of my community and the platform here. Poco, I'm sorry, but I'm going to now block you for what you've been doing to our community. and inviting everybody to be mindful of what you put in this community. I have built it brick by brick with my team. Got that, Sheetal? Sheetal has banned him. Thank you so much, Sheetal. Okay, coming back. So the market noise is going to be around, and it's going to probably deflect you, take you out of the space where you need to be. I'm noticing so many IPOs are coming, people are discussing them, so many experts are talking about them. And my biggest question here is, are we ready as a community with the level of portfolios which we have? How many goals have we ticked with our investments? Or is it just a short-term money-making activity that we are indulging ourselves into? So there's a lot of noise that I am noticing. A lot of our investors are also falling for the noise. And my invitation is for you to be able to distinguish the noise from the actual financial foundation building exercise which you need to focus on. So noise is, oh, the market is at its peak, we should all be selling our stocks. Oh my God, after ABC months, the market is going to fall. People are going to predict everything. Every other day we have ace investors who are bulls saying, oh, the market is touching 1 lakh, 10 lakh, blah, blah, blah. I'm like, okay. And then there are bears in the market who are going to say, oh, the market is going to fall. Here, at this point, it's going to fall. At that point, it's going to fall. IPOs are going to be announced. Different experts, yes, it's a great thing that they're, analyzing different IPOs and telling us. But do we really need to get there? I mean, how many goals have we ticked? And does that IPO or any investment that we are planning to do, does it really help us? So, market noise is something that we need to really become conscious of. Right? That's one thing. Second is, do I need the money within the next 1 to 2 years? So in the Money Gym program, all of us did a lot of work in goal planning. And what we need to really become conscious of is, what are our goals? What are the actions that we are taking right now to get there? And here, if we are 2-3 years away, of course we want to save all the money that we've invested and grown from the volatility of the market. And we are going to take that money out. I know most women in our community are near around my age. Most, 95% of you are in the age group of 27 to 45. And none of us really have any goals which are really nearing anytime soon. So I'm not sure if really there is a need for you to exit, because none of the stocks or funds are actually going to deal with any volatility with your goals in view. So that's the second point. The third is my equity exposure above the desired allocation? And what I invite each one of you to do is, in the Money Gym program, we have an entire structure called the net worth sheet. And that net worth sheet is clearly telling us how much diversification we have with regard to each investment, and how much diversification do we have with regard to each asset class. And then we're looking at how each investment is connected with each goal. And then what are the returns? This is the entire net worth sheet that we have built with formulas and everything in place. It's a system in itself. And anybody who rigorously follows the net worth sheet is going to save herself from exposing herself too much to equity or really not exposing herself to equity. In our community, we are barely beginning to get started. None of us here are like overexposed to equity. It's not that your 80-90% of your portfolio is in equity. And unless it's that, there is really no point selling. And even 70-80% is fine if you know what you're doing in the equity market with your equity mutual funds or your stocks. So that's another conversation. And guys, you know, what we speak here on the Facebook page, Instagram page can be a lot of theory. But if you actually start using the tools that you've learned in the Money Gym program and in the stocks course, you can actually make everything that we're talking about practical. Because one thing that I definitely want in our community is that nobody becomes an information junkie here. In finance, this is the biggest noise or the ditch. We will be information junkies. We will think that yes, we know it, but when it comes to practical application, most of us would have not done that. And that's why the programs and the tools of the programs come handy. Guys, any questions? Anything that you have to ask among these 3 points that I've shared? Total, we have 8 points. I intend to take you over all 8. So the market noise, recognizing it. Second point is, do we need the money within 1 to 3 years, which means the goal planning part. Third is our equity exposure really above the desired allocation, which is the net worth sheet that you've all worked on in the Money Gym program. So any questions that come to your view from these conversations and these questions? Hey Srija, Ridhima, Rohit, Ishika, warm welcome. Mamta, Sangeeta, Jyoti, Nishtha, Prema, Prerna, Rajeshwari, Shriya. Warm welcome, guys. Okay, Prerna, you're clear? Everybody who's clear about practical application of these? Because definitely one thing that I'm clear about is nobody just becomes information junkies here. Okay, total alignment so far, Sheetal, for you? And you're experiencing the power of the programs in your life? Got that? Yes, that's the whole point, because knowledge is all around us. But how do we use that knowledge? That's the thing. Anybody here who's not clear about the practical application? How do I practically apply this? Rajeshwari, you're clear? Got that? What about others? Guys, many of you are watching. If you could participate, it will make a bigger difference to you. The more you engage, the more you will gain. Always remember that. Okay, so I am taking that everybody is clear. Then you're able to relate it, Ishika, okay, with net worth sheet and the financial planning sheet of the Money Gym program? Sure, great. Clear for you, Radhika? Mamta, you're new, you still need to start. Mamta, have you begun watching the video recordings of the Money Gym program that you've gotten access to? Prerna, you're clear on the practical application? Got that. Bhagya, you're clear. Awesome. Preeti, no confusion. Tuhina, you will stay put with your equity mutual funds regardless of the market fluctuation. You trust your research and you've put in, which you've put in while selecting mutual funds. Sure. Mamta, this is what happens, okay? And please, don't be sorry about it. Don't get into guilt, any of this. It often happens that, our jobs and our households will consume 100% of our time. It will consume the most mind space and energy that we have. And this is why in the community, we believe in just making 1% improvement a day. So if you can just put 15 minutes of your every day towards watching the video recordings and really, working on the worksheets that you receive with them. Okay? It will help you with all the practical application. Jyoti, you've made the mistake of churning your equity portfolio in the past. Got that? You've better clarity now? Brilliant. Yeah, we'll all learn from our mistakes or each other's mistakes. Let's begin. Now the fourth question. Is the stock or equity fund underperforming the market? Now, if you have selected good quality companies which are stocks, or you've selected good quality mutual funds, it's not that because you've put in the study and because you've picked the best, immediately you will start making money on them. Doesn't happen like that. There are certain companies in my portfolio that I kept for years, like really years and years and donkey's years, because I just trusted in those companies, and I trusted that because their financial performance is so brilliant that they will make money in the market. I was clear about that. And yes, I mean today, after I think for some companies I've been waiting for now 5-6 years. I have 20-25% rate of return on those companies. But on other companies, I have over 100% return. And I've been averaging the cost throughout. So this 100% or 25% or everything is inside of averaging month on month. So what I want to say is that once you research your companies or equity funds well, you need to just stay put with them. If you've researched, there is a good methodology that you've used, not on hearsay, not because some expert said and you bought, not because an advisor said, broker said, some tip you got. No, I'm not talking about all of that. I'm talking if you've actually studied, say you studied with the community in the inner circle, you studied on your own, you picked good quality investments, now you need to persist with them. So one of the important attitudes of any investor is to focus and persist. The moment you lose the focus, the moment you lose on that consistency, you will fail, you will fall for the noise which is there in the market. And that is where you need to be cautious. That, okay, what am I doing? What's happening with my investments? So if you look at the net worth sheet, your stocks portfolio sheet of the Money Gym program, or the mutual fund portfolio sheet of the Money Gym program, they're all telling you the investments that you picked, the asset allocation you have, the diversification that you have, and the rates of return that you're generating. And initially, the rates of return may not be high, and you got to persist. Sometimes for a long time, the returns might not be great. Could be 3 years, 5 years, but do you trust that company, that business, or that fund, the fund manager? And then it's all about persisting. And yes, if the fundamentals change, then you will sell. And that is exactly what the fifth question is. That have company fundamentals or facts or fund attributes changed? If that is what has changed, and for that what is critical is that you be financially educated. Because if you're not financially educated, you've not done your research, you've not done your study, I mean the fundamentals change or whatever is happening, you wouldn't know. So basically it is knowledge and then using that knowledge to your advantage that's going to help you. So fundamentals is one. I'm reading a line which I quite liked from this paragraph under have company fundamentals changed. In the absence of material changes in the company fundamentals or fund characteristics, exiting the investment may not make sense. So while we all think whatever we do is making absolute sense, it does make absolute sense to us. But if we start talking with other people, we may notice that it is not making sense. So that's why I also believe in the power of community, and I believe in the power of people coming together. Like I do believe in the power of families. Yeah, I believe in the power of communities, togetherness. Because how many changes can you notice? You might sit in your bubble, but if you are actually having discussions about the companies that you've invested in, it can open your eyes to a different kind of viewpoint which wasn't available to you by yourself. So I wouldn't say only the company fundamentals, but I would add up community to this point and say that yes, if you're discussing constantly, you're reading, you're learning, and I'm talking 1% day. I myself put hardly 15 minutes every day to my finances. So if we can just keep doing that. Next, are the stocks or funds past their shelf life? Which means that they've already hit the peak and there is nowhere further to go. Well, I quite don't agree with this. So, be ready to make a swift exit from a stock or fund once the gains are captured, it is saying. The story can take a dramatic turn within a few years. Such time-bound bets are best played as tactical investments. Now, I am not an investor like that. Maybe my temperament is different. And I am not somebody who invests in investments which have a short shelf life. I believe in companies and funds which are here for the long time, which are here to serve the community for a long, long time. So yes, all this conversation around timing the market just doesn't go with me. But that's my bias and that's my view. I don't want to kind of do any investments which have a shorter life. Like I know there were investors around me who, when they saw that the coronavirus crisis had hit us, I mean the first wave, they started entering the pharma business. The pharma index funds and all of that. And I somehow am somebody who feels that, when the first wave had already hit, then I was already late for that kind of an investment. So I don't go for investments which are that short term, which have that short a shelf life. Okay, next question is, have we accounted for all the costs? So, if you're already in a tax bracket which is the highest, or even if it's the second highest, it actually makes sense to go over the costs. This is also one reason that actually stops me from exiting my stocks, especially the ones where my gains are quite high. Because I can sell them, but then what will I do with that money? And when I sell them, and am I only going to pay taxes with my gains? So what's the point? So I'm reading a couple of lines from here. Someone who is exiting within a year of investment faces a tax of 15% on entire gains. This is apart from the usual brokerage cost and other levies like STT. When selling units of equity funds, you may also incur an exit load of around 1% of the total proceeds. So that's another thing to look at. The last one. Am I holding too many stocks or funds? Well, this you would know if you are maintaining your stocks portfolio sheet. And of the Money Gym program, in the stocks portfolio sheet, we also share this in the stocks course. And it tells you how much you are diversifying with each investment. Are you holding too many of them? Like, I am clear, I am not going to buy more than 10 stocks, 10 companies ever. For me, it becomes clutter. And at one point, I had cluttered my portfolio and then I exited it. And now I have a very concentrated portfolio, which is now giving me far more returns than that, that portfolio which was cluttered. So the more concentrated your portfolio is, the more the returns are going to be. And and the most potential you're going to explore, because you've employed your money in the best investments according to you. And also the same I feel for equity mutual funds, though I have just some funds in my portfolio, and I anyways don't believe in buying more than 4 or 5 funds together. So yeah, these are all the questions that you need to ask yourself when you are thinking of even exiting from this market. What are you guys getting? Okay, Tuhina is saying, yes, this is very important consideration. We may end up losing unnecessarily. Yes. Prerna, I like that question and I like that answer. She's saying, how do you know if any stock has reached its shelf life? It's like timing the market. Sheetal? Okay, she's responding to Namita. She's saying, I think your daughter and her fiance have decided with all good intentions and love. Okay, what have they decided? Let me see. Namita, your daughter's marriage is next year and she's adamant she and her fiance will fund the marriage. Okay, that's great. I think that's an absolute privilege as a parent to have children fund their own marriage. Yes. Well, I have also told my parents enough times that they should keep their money for their old age and now they should actually be spending on themselves. You never know the future. Yes. Gift her, write a will, right? And you can always leave that money for her. Right now, you may want to just keep it for yourself, keep it for your retirement. If it's left, just leave a will, and and I think your children can give to whoever it belongs to. Ignore the market noise, Rajeshwari. Focus on your financial goals. Sheetal is saying, I have become an intelligent and a patient investor with yet another decoding with the community. I think that's a very important point. Because I notice people, they miss being patient. But when you're constantly engaging yourself in conversations like these, it may take care of you and your emotions. Anorima, don't exit unless you are in the need of the money. Richa, no reasons to sell unless one needs the money. It will multiply in the future. Karishma, no way we can time the market. Depends on our faith in the company. Shubhangi, you made one mistake of selling. Okay, got that. Let's not do it again, absolutely. Sapna, let's stick to the basics. Absolutely. Keep our fundamentals right and tight. Yeah, there are a lot of distractions which will come. Absolutely, guys. Don't clutter your portfolio with too many stocks or funds. You can't be part of every good stock, every good opportunity. Yes, like you can't marry every nice guy that you see around. It's like that. You can't take up everything. Have faith in your research. Absolutely. Ignore the market noise. And actually, if you buy good companies and you stay put with them, even if you don't do too much hanky-panky, you're going to make money. It's like that. I would now like to point out some noise from the ET Wealth. And I will not name people, but I will just read what is written. And in June 2011, one person said, another recession is coming and coming soon. In May 2012, somebody said, I think we could have a global recession either in Q4 or early 2013. It never came. March 2013, when the latest bubble pops, there will be nothing to stop the collapse. If this sounds like advice to get out of the market and hide out in cash, it is. So people will give you all this advice, okay? They'll try to scare you. They'll try to, kind of panic you, and who you are in that moment will actually build you up. So you want to build your finances, you got to build yourself up. You got to build your emotions up. And I really believe in the power of personal development, self-training. A lot of it I indulge in myself on an everyday basis. I kind of indulge in it with my team. And I think that is one conversation we all need to move towards. March 2013, one person said, we've got a much bigger collapse coming. I'm 100% confident the crisis that we are going to have will be much worse than the one we had in 2008. Really? 2013, the market is going to have one more rally. Then once we get above that high, I think it is going to be more treacherous. I think it is all preordained right now. All noise, a lot of noise. So I'm giving you examples of all the noise around. September 2015, we are headed towards a strong correction and possibly a complete meltdown, but not systemic like 2008. I do think we are in a very massive bubble, and when it bursts, it isn't going to be pretty. It could be a bloodbath. Last one, I'm reading from 2016. Sell everything. Nothing looks good. And these are all examples of a lot of noise around us, which probably we need to stay away from, we need to stay aware of. On this note, guys, I'm closing the live. I trust you've gotten all your lessons for today for your financial expansion and growth. Before I leave, I could just quickly read through, okay, fear mongers. Yes, absolutely. I see a lot of laugh around in the community, which I'm loving. Please let the good old portfolio remain. Absolutely, Jyoti. Rohini, I always remember what Priyanka said. Can't marry every nice guy, you see. Yeah, it's my very old dialogue. You will often hear me saying this in the stocks program for sure. That helps me stay out of emotional shopping temptations. Thanks for that quote, Priyanka. Sure, Rohini, absolute privilege. Thank you for all that love, everybody, that you've been sharing. On this note, guys, closing the live. See you around. Take charge, stay safe, and keep learning, keep growing. We stand for each one of yours financial progress. Take charge.